So it's, and that printing is making the world more and more unstable, because it's dividing, it's enriching some at the expense of others at a rate that is increasing with each print. Inflation, if you looked at inflation or deflation, inflation, the other side of the coin of inflation is wage deflation. It's one and the same.
Right.
So
right.
I'm making my money worth less, and I'm making my wages worth less. So I'm giving people wage decreases.
Mm-hmm.
And it's one and the same. And by doing that, I'm inflating prices of hard assets like raw materials, like houses and everything else are going up at the rate of inflation, as people look for stores of value against currency devaluation.
Mm-hmm.
And everybody else is getting their pocket picked.
Right.
So I find it a certain irony in, and by the way, changing an actor in the system won't change the system. No matter if it's Republican, Democrat, no matter who it is in the system will not change, because it's a structural problem.
Right.
So imagine saying, okay, I've created a whole bunch of wealth inequality because everybody who owns assets, the people who own assets, who own stocks, who own houses and everything else, they're getting a gift through inflation. Those prices are going up, and the people who don't own them are getting their pocket picked, because their income is going down in relation to that.
Right.
So, and it gets worse and worse. So now imagine in this world, this Frankenstein monster that we've created. Now, I hold prices unnaturally high on one side. Let's use commercial real estate as an example. Mm-hmm. Commercial real estate should not be priced anywhere near where it is right now in the height of COVID.
Right.
And it's higher. Mm-hmm. So that seems like an outlier, but it's not an outlier. So it stocks, everything else follow that same model. So I hold prices high unnaturally by printing money. Mm-hmm. And then a whole bunch of people can't pay for those prices because their rents go up higher and everything else, because it has to offset how much the new price is worth. Mm-hmm. And now I need to give them money that I don't have to be able to pay for the prices I unnaturally held high.
Right.
And the whole thing keeps on reinforcing. So you get divide of society and further divide of society by where we are here on the scale.
Which explains a lot of the division that we've seen develop over the last 10, 20 years. And ultimately what you explain in the book as well is that this is one of the main causes, if not the underlying source of really the fall or the collapse of societies, because the wealth inequality steepens to such an extent that it just topples because of something like revolution or war or something like that.
Exactly. That's where it goes. If you keep doing this, that's where it goes. But then if you go to the other side of the coin, how do they stop now?
Right.
So let's just imagine you're Powell and you, or you're Biden. What do you do?
Right.
And I'm really being serious here, because then you see the folly of the existing system, and I have some proposals or some thoughts on this, but what do you do in the existing system that could change the system? So today there's over $130 trillion of negative real interest bonds. So in other words, the risk-free rate, 130 trillion, and every other economic calculation, houses, stocks, everything else are built on top of that, essentially risk-free rate.
Right.
So the safest place I can store my money, what you would think would be the place where it's risk-free, and I would make the lowest return. Right. And then that would be the pegging for all other calculations. So now you have negative real interest rates in that whole stack. So on my best day, if I hold this bond, I lose money.
Right.
On my best day.
Right.
I hold this bond to maturity, I lose money. But I know that governments, it's never going to be a best day. It's going to get worse. And what you're seeing is a lot of this money sitting here realizing that it has ultimate risk. It isn't risk-free. and it's getting worse and worse and worse. And that's actually what's driving Bitcoin adoption as well, because as people start to see, wait, Bitcoin might actually have, in my opinion, it has way less risk than this. But if that's the risk-free rate, where do I go to be able to? And then as money leaves that system into a new system that competes against that system, what would you do as a government?
Right.
Because interest rates have to go up to be able, you see the 10-year bond you're going through the roof right now.
Mm-hmm.
It has to go way higher. So do all the, and if it goes way higher to keep money in the system, then the entire economy collapses. But there's nothing backing the entire economy. It's just a bunch of counterparty risk. It's just debt all the way down to the sand. That 130 trillion. There's no gold back. There's nothing backing it.
Right.
It's just because I say it's good.
Right. Yeah.
And now, as money leaves that system into a new system and interest rates go up, there has to be a response to be able to buy it all, to print way more.
Yeah. Yeah. There's no, there's at this point, with the size of how big this problem has gotten, like you're saying, if you're in a position of leadership, what is the option? It reminds me of the Forgotten Depression is a book by Jim Grant about the 1921 Depression. And it was called the Great Depression until 1929, 1930. But during that time when the collapse started, the Federal Reserve tightened. They raised interest rates. The government balanced their budget. And this is something Austrian economists, especially, I don't think they focus on enough, is the pain that happens when you take like the correct response. There was the short-term pain that happened was far more severe than what happened in the Great Depression. It just lasted a very short amount of time and kind of resolved itself. Now we're at this point, there's probably a really good argument to say we're past that point. If they decided, hey, we're going to take away the punch bowl, we're going to stop printing, we won't monetize any more of the government's debt, government has to, austerity, balance the budget, all that. The collapse, the economic pain would probably be just unthinkable
globally, because there's nothing backing the system. So in 2008, in my company at that time, we had we saw the firsthand effects of what was going to be TARP before TARP.
Okay.
And what ended up happening is we had fully funded LCs that wouldn't be accepted by counterparty banks in other countries. So trade broke down.
Yeah.
It stopped for 3 days. Nobody would accept. And you're going, wait, the money's there. It's fully funded. Yeah. And nobody cared because they didn't trust the banking institution where the money was there, because it's not money. It's just just a belief in money. It's a belief. It's a ledger entry. Mm-hmm. And so once that belief is broken, it just keeps unwinding. And so you'd see this system that requires a technology, it requires a currency that allows for deflation. That is unequivocal. We have to have that for society to thrive. But the existing system, it would reset the entire system, because you'd see the emperor has no clothes, and it would just keep, and that counterparty risk would keep coming down all the way to the ground. So that is the problem right now on the transition between systems.
So in this transition between systems, we can look at it and we can say, why can't we just continue repeating what we're doing right now? Every time there's a panic or a collapse or a recession, depression, some sort of crisis, why can't we just print more? Is it inevitable that we transition to a deflationary system?
So let's go through the logic of what you just said. So remember in 2008 and the outrage at $250 billion.
Right.
Outrage.
Yeah.
Right. And that was a saving the system. And then it required more. And it required ever more. And now we're into trillions and trillions, and pretty soon we'll be into tens of trillions. And people start asking, and so could you keep doing that if you were one country and your citizens allowed you to do that forever? Maybe. Because your citizens would have to say, they would have to agree, okay, I'm going to do this. Effectively, government, there is no free market. Government controls who gets what, and I'm going to just let government do that. Because that's what that is, right? I print I effectively, it's distributing it to the top people But then government could say, no, 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 I'm going to create an economy over here. I'm going to give the bottom people this type of money. Mm-hmm. That always leads you away from the free market. That always leads into control by the biggest thug.
Right.
Right. Throughout
Always.
history. Yeah. Always. And managed economies, if you widen your time band, not with what you think is happening in China right now, but if you widen your time band out to history, managed economies never outperform free market economies.
Right.
Because there's no way a certain number of people could outthink everyone.
Right.
And so a free market economy, and if you buy that free market, so free market gives better living standards to everybody, because an economy, the taxes that you pay are as a result of a free market. So you realize that centrally planned economies like Russia can't really survive without controlling money and doing it and biggest thug. Mm-hmm. And so those are the two kind of ends of the spectrum that and we're moving in right now. The world is moving into more central planning. Everyone, right? With more money printing, you're removing the free market, and it's all central planning.